Good evening. Today, welcome again to second part of our insurance series. And today we are looking at the retirement part 2. There are 3 of them. Part 1, we dealt with how pension helps you deal or respond to your income needs in retirement. And in today's part, I want us to look at how pension helps you fund your interests during retirement. My name is Ayuna Pinwa again, and I want to introduce myself as a person who is very passionate about how we program our retirement, ourselves for retirement, and how we get on in that retirement phase of our lives, which personally I'm already experiencing. And therefore, part of it, when I talk about it, I'll talk about it from a personal experience point of view. It is exciting, it is good because it gives you an opportunity to slow down in life and recap and enjoy your past sweat without a lot of taking a lot of time. I would want to share my screen so that we can look at what we have in the presentation today. Just give me 1 second and we do this. I will also want to let you know that we are recording this, and the program will be available even after on YouTube and even on our website, Holistic Insurance Solutions website. So this is the second part of our series. And we are going to look at how our pension funds helps you fund your interests in retirement. Sorry. To introduce, I would want to indicate that the aim or the purpose of this initiative is to facilitate our communities or our friends or our population from an early age to prioritize saving for retirement or saving towards retirement. Also to help you maintain the standard of living as much as possible after retiring. That is the standard of living that you used to enjoy before retirement. We should strive to maintain it as much as possible. The activities you enjoyed, if it is possible, continue enjoying them because they are good for you. 3, the whole purpose of doing this is to ensure that we keep old age poverty in abeyance. We do not want a situation where you retire into poverty. What activities would you like to continue with or doing in retirement? Almost certain, but not limited to the following items. Majority of us would say, I would like to continue enjoying club membership. I was a member of a particular club or social club, and I would want to continue enjoying it. I would also want to continue traveling both locally and internationally. I would like to be able to visit my children and entertain grandchildren. I would like to continue undertaking regular medical checkups. I would like to continue being a circle member or to save in a circle, so that whenever I need financial boosting in the small projects that I'll be undertaking in my retirement, I should be able to borrow. And this is critical because we all know that banks will not feel comfortable lending money to a person who is not earning a regular salary. And therefore, one of the requirements that they need in order to assess you as a credit-worthy customer is a regular flow of your salary into your bank account. We would also want to be able to meet your regular financial obligations in comfort or stress-free. I would want to continue being able to meet my bills and meet them on time. I would want to continue participating socially whenever I'm required to, financially. And I would also want to be able to manage to upkeep or to manage the upkeep of my home in the same manner that I used to before I retired or while I was working. What would limit you from achieving this retirement dreams or aspirations? The answer to this to this question is most certainly will be the things that hold you back from doing all the items that we have narrated is insufficient liquidity. I don't have enough cash, irregular income flow. Maybe I have settled for a business. The way the business income flows from or revenue flows from a business, it's not the same way the income or revenue will flow the way it used to flow as a salary. A salary was definite and it used to be paid at a particular date in the month. Business will give you revenue, but it will not be as regular as it used as a salary would be. Inability to predict this income and also inability to predict what will happen, both in the short term and in the long term. Many times you plan what to do or activities to do, you budget, but other things crop up and completely throw you out of balance. And you find yourself having to adjust or even postpone, if not completely cancel some commitments or some items that you had wanted to undertake. You'd want to, perhaps you may have retired or finalized with your work or job when your mortgage debt was not fully paid. If you still have an outstanding loan to your home, for example, you still need to continue servicing it. If you still have an outstanding loan to your car, perhaps you may still need to finish it and to continue making regular payments. You could even be having children who are still pursuing higher education, or even if they are not pursuing higher education, they may not have completed or completely become independent, and therefore they also require your support. So these are some of the items that would make it impossible for you to do exactly what you would like to do and what you would enjoy to do in retirement. Let us look at how the reality will be like. You are used to regular income, that is in form of a salary. You were used to reporting to work at regular times. That has stopped. And now you have become a manager of yourself. You have to manage your income and also manage your time. So what is the most likely thing to happen? The most likely thing to happen is that you will tend to prioritize your needs. You will put the most critical needs at the top of your list. For example, you may start with recurrent bills, such as electricity and taxes. These are obligations that you cannot shelve and you cannot postpone. When they fall due, they must be paid. There is the element of food. You have to feed yourself, you have to feed your family, and there is also home maintenance and repairs. Your home will still require attention, and items that need to be or areas that need to be maintained when this demand comes across will still have to be met. You will still need to fund or to fuel your car and also to maintain it. For your local transport, you may also want to put some funds aside for your travel expenses. You would want to see places, you'd want to see your grandchildren, you'd want to see your friends, and therefore you need to put funds aside to facilitate that. The issue of how frequently this happens is squarely dependent on availability of funds. You also need to put funds aside for your regular medical checkup. Unfortunately, you realize that what you would really want to do or what you would enjoy doing may not even feature in this list. For example, we do not have a club membership, which perhaps when you were working, it used to be funded by the company. We do not have a circle membership. So this is a saving requirement. So you may not have funds left excess funds to be able to cater for that saving. And perhaps one or two other things that you would really want to enjoy doing, but you cannot afford it. If you can afford, you will find that item coming to the bottom of the list. And very rarely, they may be catered for at all. So in other words, you find that what you love doing and what you think is fun for you, you find it hard to budget for it or to spare resources for it. So let us look at how do we prevent lowering standard of life in retirement? What steps would we need to take during our working life so that we are able to continue taking care of aspects that are valuable to us, aspects that are important to us during working life and after? and during retirement or after working life. It is important to note that it may be difficult to solve that problem when retirement sets in. And therefore, you need to start early to save. And the way you save for your retirement, it is best if you put your savings at a registered retirement scheme. It could be an occupational scheme, that is one that is funded by the employer, or one that you fund yourself. Especially for those occupational schemes are mainly for those who are employed or formerly employed, and the employer has taken initiative to ensure that employees' retirement is taken care of from the time they join employment. In the same manner as an individual, when you start earning, even if you are earning through self-employment, you need to take steps to ensure that you start early, providing for your retirement. If you feel the scheme that you are participating in may not be helping you set aside enough funds to live on during retirement, you can complement those benefits by taking a voluntary additional contribution to your scheme. And if not, in that case, if not, then you open a personal or you open an account with a personal retirement scheme. The other thing that we need to cultivate the habit of doing is to ensure that we do not encash our retirement savings when we change employment. I know it is very tempting for anybody when you leave employment, maybe in your 30s, you change jobs, you wanted to encash the funds that you had saved. What that does is it sets you back. And now you find yourself in your new job, you start saving for retirement as you move on. If again, for those who change jobs more than once, you find yourself starting saving for your retirement thrice or 4 times during your working career. What impact does that have? What it does is that it makes you save for your retirement and consume what you have saved. And therefore, by the time you reach the end of the actual retirement age, you will find the benefits that you have are actually inadequate to take care of your needs in retirement. So it is important that we note that instead of, whenever you change your jobs, instead of encashing your benefits, transfer those funds to a personal retirement scheme or to your new employer's occupational scheme, so that there is continuity in terms of your retirement savings. Minimum or minimize the amount taken at retirement. When your benefits are being calculated at retirement, there is the tendency, especially for those of us who save through provident funds, and where the rules do not compel you to take an annuity or a pension on retirement. What happens is that you take the entire or a good percentage of your benefits as a lump sum. And what happens is that it gets used up fairly and very quickly, such that within the first 3 years, your money or your cash lump sum is spent and finished. So minimize the amount taken. Even if you have immediate needs that require lump sum funds, it is best preferred that you minimize that so that you use as much as possible of your retirement savings to purchase a retirement income or an annuity. Shop prudently for your annuity service provider when you attain retirement age. The amount of retirement income that you earn will differ from organization to organization depending on the rate of return that service provider is giving or they are willing to give to your funds. And therefore, it's good to get at least 3 service providers to give you a quotation so that you make a wise decision on where to purchase your annuity from. The other aspect, while looking for an annuity service provider, you need to address and to put into consideration the security of the company that you are placing your funds with. Remember, this is the last source of living income that you will live on the rest of your life. If you happen to place it with an unstable institution, you will have a problem in that if anything happens to that company, or if it is not able to pay you regularly, you will be experiencing problems. So the stability and strength of the company with which you invest your funds is very, very critical. You will note that an organization could promise a high rate of return, but if it is not stable, it is better to moderate that rate of return and place or purchase your annuity from a stable service provider. Maintain an investment fund which can complement your annuity to take care of your periodic needs like insurance premiums and other emergencies. You realize that you still, for example, be required to continue paying for your medical insurance premium. You will continue to pay for your home insurance. You will also need to continue paying for your car insurance. So you need to have a fund or actually an emergency fund that can take care of this, and also a fund where any amount of money that you could have or you could save from your retirement income, because you may not finish to the last cent that is paid to you. Avoid keeping money on the current account unless the funds are for current expenditure, like paying electricity bill, paying water bill, monies that need to take care of annual expenses should not be kept, should actually be invested and not be left to the current account. So this will help you optimize on your retirement earning, and therefore it will help you ensure that your standard of life is maintained. You continue enjoying your club membership, you continue enjoying your travel, and you continue maintaining your home and maintaining your social life in terms of even visiting your family members, your children, your grandchildren, and all this will help in prolonging your life and giving you a happy life during retirement, and a life that is affordable and healthy. As a last part of my presentation, I would want to say that old age poverty is all being moneyless in retirement can actually grind you and can ground you and restrict your excitement, all your fun, all your joy, and it should be prevented at all cost. And the time to prevent old age poverty is not during old age. It is during your youth. And that is why it is important that you start thinking about it early, immediately after you start earning a living. Make sacrifices today for a happy tomorrow. And that is the end of my presentation. And I can be reached on email. If you click the email button, you'll be able to send an email to us. If you click this, it is called a book a session. You can, for example, if you click it, it will open and you'll be able to put in your details. You put in your email address. You will also put in your telephone number. You'll be able to, you also tell us what time you are available, that is date and time, and when it is most convenient to reach you so that we can reach out to you and discuss the issues that you could be having, and also help you or facilitate you to set up a retirement account. You can also, for those of us, or for those of you who have been able to look at our other presentations, we have investment, we have retirement, and we have insurance. We also have one on products. You can contact us, put your inquiry to regarding any of these areas, and then you simply click the submit button, and the form will reach us, and we'll be able to contact you and address you at the point of your need. You can also do a chat to us. You can do a WhatsApp chat just by clicking this button. It will come directly to me and I'll respond to you. So with that, I want to thank you for your attention, and I pray that you stay safe, and that I hope you find this information useful and to help you in setting up your retirement package. So thank you very much and be blessed.